Good morning, traders. It's 8:01 a.m. on Thursday, the 5th of May, 2016. Happy Cinco de Mayo if you're from or are Mexican. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance, not indicative of future results. The overnight news flow is fairly light. Um, there was a release from China early on showing that um, what happened here? Yeah, the China APR PMI services came in at 51.2 versus 52.2. The Shanghai Composite's actually higher. The APR PMI in Hong Kong came in at 45.3 versus 45.5. Both reports are light, but it shows some strengthening in the underlying components. UK services PMI came in at 52.3 versus 53.5. But overall, the market sentiment is fairly strong. There's some risk appetite today. Initial claims came in at 274 versus 260, worse just about a half hour ago. And continuing claims at 2.12 versus 2.13 million. So overall, some mixed messages on the news flow, but the markets are clearly bullish this morning, with crude oil leading the pack, up 4.55%, 4.55%, trading at 45.73. Crude oil is up almost $2, followed by gold, which is up almost 1%, $12.50, trading at 1286.80. Again, it's below that 1300 mark, but it is gold seems to be consolidating and strengthening. And then the next in line is the mini Russell, the stocks, Euro Stocks 50, Nasdaq, S&P, Dow, Bund, and so on. With the euro being the only futures market I'm monitoring, which is down. The euro's down 0.63%, trading at $1.1442 on the June futures. So overall, the sentiment is on the risk appetite is on. The sentiment is on the risk side. Let's take a quick look at our let's see what's going on here. Let's take a quick look at what's happening from yesterday's Trader Bite. The expectation in yesterday's Trader Bite is for the market to open around that 44, 43 area, to drop, to dip down into the overnight low, give the 2040-75 a visit, or 2040-50 key point of control down below. Visit that and then start moving up. The expectation is that we would finish the day with a test higher. The secondary hypothesis was for the opposite, essentially, looking for the market to test up on the first attempt and then rotate down through that 2040 area. There's a strong liquidity area that I have marked here. If you have flex levels in your Investor RT software, you should be able to see this line here. Key liquidity line at 2035. I expected that to show support if it does in fact push through the 2040 50 area. The 2040-50 area is again a key micro composite point of control, which means it's an area of acceptance, a very large area of acceptance, in fact, and it's expected to tangle the market up under normal circumstances. So overall, the secondary hypothesis played out yesterday. So if we look at the market action on the open, in fact, if I look at the short-term chart, you'll see a very clean test of the prior day's low right here, and then the market rotates down, puts in this awfully weak low, and then it finally breaks through and pulls back for a pretty bullish looking run into the prior day's value area. The IBs put in, and then it just falls off from there, and it ultimately ends up taking out the 20 40 50 area. So as we move forward here, you can see that it ended up taking out that overnight overnight low stat, and pushing up against this MC point of control before bouncing. Uh, so overall, it was a mixed bag, a very, very choppy trade yesterday. We did get the primary hypo and the secondary hypo. In a way, we did push back up, but we also pushed down and stayed down, and then ultimately finished in the middle. A normal variation day, with the point of control shifting down lower from the prior day value shifting lower. It would have been nice to get a neutral day to set us up for the trade back up into the range above, but that's not what has set up. With the non-farm payrolls around the corner tomorrow, I'm looking for today to be a fairly tentative type of trade. Look at the consolidation that we have here. This really choppy trade area. Great for short-term trading. Some pretty consistent reversion type trades. Multiple tests of the mid yesterday. Just several mid setups. After pushing lower, it kept going back to the mid and holding that area. But overall, we are shifting our value down. We are one time framing down. We have lower highs throughout, and I'm looking for today to reverse that pattern, um, since we have tested the MC point of control from above. So let's shift out a little bit. Let's get rid of these. Let's shift out a little bit and pull in this profile and look at where we are. So you can see here, we are solidly, man, I need to go up to a higher time frame. Let me switch to a 60-minute to clean this up a little bit. So we have shifted into this prior profile. So if I drag this forward, not include yesterday, you can see that we've moved from these uh, high volume areas all the way down through, and are testing down below, and are back in this point of control area at 51 and a quarter being key. We've tested the old MC point of control at 40.50 and have bounced off of it. But just don't forget the bigger picture, and this is the bigger picture, and it's that we're sitting in this fairly large um, composite balance area, have tested up, made new highs, and are pulling back naturally, and we're likely to revert back to the to into that 2063 area this morning. That's what's expected, and then we have non-farm payrolls to kind of mix it up a little bit tomorrow. So that's how things are shaping up. If we look at the overnight profile to see what has happened, this profile shows heavy kurtosis here in the middle. We don't see that too often. A lot of trading took place right in this 2054 area. This is an important area to mark. We had a big push overnight that was immediately taken back, and the market is pushing lower and trying to move away from this point of control. But this shows that there's a fair amount of energy. The overall volume overnight's not so great. Remember, Japan is closed. Several European countries are closed, and that's keeping the trade light overnight. But overall, there's a lot of energy that's built up here, and it's failed to hold on to this run up, and is trying to push lower. So this is trying to continue this impulsive move lower, just like we did yesterday. Remember, yesterday I talked about this big impulsive move in the European session, a pullback, and then the expectation is for a lower low, which we got in the session, and that drove the secondary hypothesis there, or actually the primary two, with a test of the 2040 area, which we got later in the session. But we have a similar kind of setup here, and you can see it's extending down now. But the 2054 is likely to be an obstacle for the longs. We're in yesterday's range. We're outside of value and we're moving towards yesterday's close. That is going to likely be the first attraction this morning. So having being in a position to open in this area here, let's switch back to 15 minutes just to standardize things here. Um, the way this is setting up right now, we are likely to open in range out of value. The expectation is an immediate responsive attempt lower to take us down to this to yesterday's close in this 46.75 is the likely test area. I expect it to get choppy here, but we have a good base, in my opinion. We have a good base here, and the expectation is it'll likely turn around, take out that 54 point of control. Once it takes out this point of control at 54 right here, this level, it's likely to get some pretty good flow coming in to push it through into that next area above, which is a 61, 61 quarter. That is the primary hypothesis today. Responsive, chop, turn around and start walking up. The only caveat with this idea is the non-farm payrolls, okay? The secondary is to open, make an attempt at that 54, get tangled up, and then become responsive after that, and then basically spend much of the day in this range down to the 40-50 again. So that's what's expected for the secondary hypothesis, and this hypothesis again is driven by the fact that we have non-farm payrolls tomorrow. So likely to see a move in the morning, likely to see quiet through right after the European close, all the way to the U.S. close, the closing range trade at about 2:30 Central, 3:30 Eastern. Expecting it to be quiet. Then I expect the bigger funds to use the futures for what they're intended, to start hedging their positions against any adverse news on the non-farm payrolls. That's how things are shaping up. Just as always, just want to remind you again to keep your risk in check. Do not trade on feeling or emotion. Trade what you see, not what your gut is telling you. Your gut does not have a place in trading, at least not in a consistent way. It might save you here and there, but overall, just follow your plan. Good luck.